What's going on, guys? It's Greeny here. Welcome back to another video. This one's just a simple tutorial on how I use TA, so technical analysis, on the charts to effectively scalp trade or swing trade on leverage exchanges. The same philosophy can be used when trading meme coins, so you can use these strategies when trading meme coins as well. But obviously, please do your own research, learn how to do this by paper trading first, using very low leverage, okay? And then from there, use your knowledge, use your experience to become a better trader. Here's the video. What's going on, guys? It's Greeny here. I thought I'd do a quick TA video about how I sometimes do some scalping strategies when trading on leverage, but also trading these altcoins using MEXC or using Blowfin. Any of these leverage exchanges, you can actually do this quite easily once you understand how leverage works. So obviously, the most simplest form of trading for me is support and resistance. And what I mean by that is establishing sections of where price action has respected, right? So as you can see here on Solana, and I'll show you very shortly, you can see that we have retested this line several times and then obviously faded below and traded back down to the bottom. So we call this one at the top resistance, because we're trying to break this at the top, all right? So we're trying to long the market and essentially go higher. And we call the bottom of this support. So as you can see here, all of these candles show me that this line right here at the price level of 179.83 is essentially a strong support or resistance zone. That's what I mean by that, okay? At the top here, and I will show you on a higher time frame very shortly, this would be the level that I would like Solana to break if I'm looking to long the market. So within this trading range, if price is consolidating, it usually does trend sideways up and down, and you can really scalp using leverage quite easily. So this is a strategy that I've used for years in this space to lock in some quick gains, right? And as you can see here, I literally just traded the bottom of this Solana zone and have taken it obviously to the top. I did obviously take profit along the way, but I'll show you how that works. So essentially, this is as simple as you can get support and resistance trading. Alternatively, guys, you can obviously, what I like to also do is make sure that you have a macro understanding of what the trend is. So in other words, if the market is actually going up, okay, essentially that means that I probably want to be favoring my longs compared to favoring my shorts, because ultimately we are trending up on a macro scale. So why would you try and short the market when naturally it's going to trend up over the coming weeks, over the coming days, or even over the coming months, okay? So it's really important to always zoom out, as you can see here, and there's a lot of noise here, and I'll explain that very shortly, but if you look here, this is Solana on the weekly, and as you can see here, we're in a very bullish uptrend. So again, on a short time frame, you want to be always favoring your longs because the macro trend is a bull. So as you can see here, guys, I've got CCI down the bottom, which is just essentially a divergent signal. RSI can be used as well, but it's a lagging indicator, so always be aware of that. But what I mean by divergence is essentially price action can do one thing, and then RSI or CCI can be give you sort of indicators that are about to show you what the market's going to do. So is it going to pump or is it going to dump? So as you can see here, this is on a macro scale, so it only gives indicators very rare. So as you can see here, we have a bull. So in other words, if you come over here, so bullish, okay, regular divergence means price action, okay, is coming down, but RSI has created a higher low, so therefore it's very likely that this is regular. However, hidden divergence is obviously where price action has started to move up, okay, so it's set a higher low, as you can see here, but divergence, as you can see here, is setting a lower low. So that's actually hidden divergence. But this is what I like to trade, this one here, particularly in meme coins, okay, because obviously meme coins don't have RSI and don't have divergences because they're just too early, okay, and they don't have RSI indicators. But this is a reversal signal that I like to look if I'm looking for a second pump or a third pump into some of these meme coins that I like to trade. So I usually trade on hidden divergences on both leverage but also on meme coins, but ideally you want to be finding those regular divergences so that you can long the market in this bull market that we're currently in. Obviously you have the flip side. If we're in a bearish market, as you can see in the screen, this is what you would be looking for shorts, okay? So ultimately, guys, how I would describe the top of the market is as soon as we see a higher low, a lower high or a lower low. So in other words, when price action shows me that Solana or BTC is probably the one to ultimately look at. But say, like, as you can see here, we did see, let's go on the daily just to show you what I mean by this. So ultimately, what you would have seen last cycle at the top is your first higher low. So you want to be very cautious when price starts to do that. So you could see it here on both peaks. So let me just minimize this noise because we have a bit of noise. Okay, so really simply, guys, this is what I mean by divergences, but also by understanding how price action works. So as you can see here, guys, we're trending up. So in other words, we had higher high, okay, higher high, and then higher high. However, we set our first lower high. So that to me would have been already a signal shift in bullish structure. But however, what can actually show you this before is the lows as well. So as you can see here, a higher low, and then we actually broke it here, guys, and that would have been the first signal, okay? So we come up and we have set, okay, as you can see here, let me clean it up a little bit just to show you on the screen. But as you can see here, that was the low and we took that out. Okay, so that's the first warning signal. Now, if price action can get back up here and then set a higher high again, okay, we still are in a bullish structure. However, what I'm looking for obviously is then if it creates a lower high compared to this one, and as you can see here on the screen, it did. So this would have been, okay, where you would have liked to obviously take profits in 2021. Similarly, over the macro trend, obviously we came back up and we saw a double peak, which is pretty crazy in the market, but essentially what you're looking for again. So see this, we saw a higher high, then we saw a higher high, and then we saw a lower high, okay? And then that again is a signal on a macro time frame to really be considerate of whether we are going to move back down. So again, lowers, we're moving up. And then as soon as we got this lower high, what did we notice? That it broke back down, it retested it. Okay, so that's a short signal right there. Retested it, couldn't get back above this support here. Okay, and therefore we continued down, and then that's where the bear market started. So that's what I'm looking at for the top of this market cycle, guys, is essentially a change in market structure. And that's what I mean by this over here. And that's how I like to trade meme coins, on literally 1 minute charts, but the same structure works on an hourly or a weekly or a daily chart as well. So there's a lesson in itself. But coming back to here, guys, as you can see here, this might be a really good long opportunity, and I might actually do this live on the show. So we're scalping. It's very risky because you are using a higher leverage to take advantage of these really small trends, okay? So we just looked at the weekly trend, and now I'm on a 5 minute chart. But if you come back and have a look, I'll take you to the hourly. This is what we're looking at on the hourly. So even on the hourly, you can see prices consolidated in this region for the past couple of hours. So since about this morning. So essentially, that shows me there's a range that I can either long or short and scalp to take advantage of that. So I dive in on the 15 minute, okay? So I would draw my lines probably on the 15 minute. As you can see here, we have wick, but we have body candles there. So that's my first support / resistance zone. Obviously, if it's on the top side here, guys, and we are in a long market, this is the resistance, okay? And then obviously the bottom, I look therefore for the bottom. So the support where I think price will bounce because we are in a bull market. So therefore we look for the cycle continuation to be obviously in the long side. So moving up over time. And as you can see here, we had liquidity respect this level previously this morning. So we saw that, okay, at 179, we have a very small sort of wick up and then price back down. Okay, so that shows me there's support resistance there. And then we have respected that a couple times here already. So I jumped on literally about an hour ago and just had a look at this, and what I saw that this potential bottom here, so price moved back down aggressively, right? And essentially what I was hoping to do, and as you can see here, I managed to catch the long reversal down the bottom. So price came up, it respected here. We could have potentially moved up, okay, but we didn't. We did obviously reject from there. So again, you could have had an active short there and probably set your stop loss up here. So in other words, I could have opened a short on a very small time frame, okay? Open my short at this level at 182.26. I would have set my stop loss above that previous high there, okay? So ignoring the current one because that's where price action actually is. Would have set it up here, okay? That would have been a very aggressive short. And as you can come over to the side, oops, wrong one. If we come down here, we got a short and I put that at the top, okay? That's a long, so let me just change that to a short. All right. As you can see here, we would have put our stop loss at that level, and then we would have looked to short it or either to the midline, and I'll show you how you do that in a second, or all the way to the bottom of the screen. And as you can see here, that's a ratio of 3.73. So that means that price action, if it hits your stop loss, is actually a really small percentage of the amount of profit that you can actually take advantage of for trading this literally 15-minute range. So that could have been a really aggressive short all the way down to the bottom. Now, what I would have done then, guys, is obviously long the market from the bottom. So I would have done the same. I would have had an order set. Okay, so again, we come here. I would have had an order set at the bottom. Okay, my stop loss would have been at this low, as you can see here, to be protective. And then I would have looked to long all the way back up here, and then obviously hold some more if we do start to shift macro and head higher, because this is obviously on a 15-minute chart. So we are trading very scalp traders. But again, this is a 2 ratio. So in other words, I'm going to double my profit compared to the stop loss if it gets stopped out. So The way you set that is obviously you just find these levels and you enter them over on the side, okay, and you adjust your leverage accordingly. Now, obviously, I would advise, please, this is not financial advice, guys. This is for education purposes only. Please trade on a really low leverage until you really understand how this works, because it is super risky trading leverage. Now, obviously, as you can see here, I caught that bottom down the bottom. So the green means that I caught that. So I was along the market, and then I stopped my shorts here, and then obviously I have a little bit going up. But right now, which I am about to miss because I am currently showing you. So this is a retest, guys. This is actually a really beautiful breakout long, which I'm going to miss because I'm currently live with you guys. But essentially, price action comes up, it breaks that resistance, okay? It then bounces from there for support, and ideally we see price action move up higher. So I can also set along here, okay? So I would have my long there. Now, it depends on how high your leverage is. So if you're a lower leverage trader, you probably want to have it all the way back down below this low, okay? And then you would set your TP a lot higher, which you would zoom out, and I'll show you how I do that very shortly. But essentially what I would be doing is having my long here. I'd have it very aggressively, so I'd look for the wick. So the midline, so to track the midline, guys, you just find your fib tool, draw it down like that, get your horizontal tool, as you can see here on the screen, draw it from the 0.5, okay? Oops, wrong line. I think it's the next one down. So there you go. There's a 0.5, guys, as you can see on the fib. Delete your fib, and then that's a level that I would probably look to have my short. So price action always respects support and resistance and the 0.5 level. Now, that's where I would have it slightly below that 0.5 level. As you can see here, price respected that previously, earlier today, twice, okay? So that's why I'd have that as my stop loss. Alternatively, it is also the previous lows, as you can see here, despite this deviation below that zone. So deviation essentially is just anything that goes below, but then comes back into the same range, okay? And that's what that is here. So that would be a deviation. And then this one here would be a deviation on the higher time frame zone that we've been trading on the 15-minute, okay? So I would look to potentially long this, okay? Now, my profit target, so that's your stop loss, as you can see here, I set it about 180.94. You know what, just to be safer, I would put it below those 2 wicks there, because we have seen liquidity grab from there. So I put it a little bit lower to be nice and safe. It would be 180.69, and then I would go to a higher time frame. So I'd go to a 15-minute, okay? All right, that's not showing me too much. We're in a range, so if we do push higher on a macro trend, it's looking like we might go even higher. And if you do look even higher, I then start to consider, okay, where are some previous highs that we might like to take out? So then I would start to drag, sorry, I might have to do it again, but let's delete it, delete. But then I would like to target sort of these previous highs. So that high there, I'd like to target this high here, okay? And then the last thing, and then obviously these ones here, and then even maybe the larger frame. As you can see, I've got an even larger support and resistance zone, guys. So that's the 0.5 probably if you were to draw a fib. So this is on a 1 hourly. As you can see here, the 0.5 is literally there. So it's very close to the 0.5. So that would be on a higher support and resistance sort of scalping strategy that you can adopt, as you can see, on so many different time frames. So it does work. It's a really simple strategy. But again, that 0.5, so I'd probably say that this high here would be my target. And then if not slightly higher to this 0.5 level on the hourly chart would be my 2 targets. So once I've done that, guys, you then come back, okay, to the small time frames. You'd set your limit order here for a long at this position. What do we say? The target would be about here. And this is scalp trading, not swing trading, okay? Scalp trading on a very short time frame. You come back up, okay? I have to zoom in. As you can see, the candles are a lot smaller because we are on a larger time frame. And what did I say? It was this wick here that I wanted to respect. So I would set it at about 180.7, I think it was 69, previously, and then there's my TP. So as you can see here, it's a nice scalp trade of 1.67. So essentially price moves up 1.67% times compared to me hitting my stop loss. So you always want to be targeting at least 2 or above as your ratio for longs or shorts, because otherwise it doesn't favor you to actually take that scalp. However, what you can actually do therefore is have, as you can see, I've caught this bottom down here. And so I have already aggressively, I would have had my stop loss down here. I would have had it here, okay? And I would have had my TP, my first TP there. As you can see, 1.62. But if you do catch that reversal up to this higher range, that's when it starts to be a bit more lucrative for you, because it's a 3.62 returns compared to that 1.62 that we took. However, we took that and obviously caught the low here, and ideally are taking this higher, okay? Show support here, and then hopefully target this, maybe show support there, and target the next one that we showed higher on a higher time frame. So that's how I like to scalp trade on different time settings. As you can see here, this is the hourly. Again, you can do this on the hourly, guys, as well. Just zoom out, draw your support and resistance zones, as you can see here, okay? Support and resistance, again, we can go to the 4 hour, And as you can see, price respects levels of support and resistance, okay? So you can adopt this strategy not only on the 5 minutes and the 1 minutes, which is very risky, so please be careful. So maybe try just using this as a paper trade initially, okay, on some higher time frames, so the hourly and the 4 hourly. But as you can see, price respects these levels. So if you do have some shorts set up here, okay, you can actually be really lucrative in a bull market because price loves to consolidate until it does make a decision about falling outside of this range, okay? And obviously down the bottom, you can find these longs, okay, and ultimately trade it back up to the top. And if you are doing this, guys, and you are super active and you have the time to do this, these could be so lucrative, literally. So price all the way back to the top is 21%. This is on a 4-hour chart. So if you just have a bit of time every few days to check in, you can find and set some of these limit orders to be nice and aggressive. So I'll show you what the levels would be for this. But as you can see here, 21%. So if you had 10x leverage, that's 210% on your trade all the way back to the top. And obviously if it's to the mid zone, okay, so we drew that before, to the mid zone is about a 10% move. So that's crazy, guys. That's still 100%. So 2x returns on your trade. So just to wrap up, if I was to potentially be longing this all the way back to the top, essentially I would set my stop loss. Just to recap, guys, this is how I'd do it. Okay, my TP would be the top of this range. If not, hold a little bag for higher so that maybe the macro does shift to higher, okay? And my TP would be below this wick over here, okay? Because there's liquidity there. There's a couple, obviously price was respected there as well. So that's why, as you can see, this is prime evidence of it, okay? There's a line there. So we always come back and retest the liquidity down here. So that would be my level of stop loss, probably just below there to be nice and safe. Okay, so you could be even more safe and put it below both wicks. Obviously I'll just do it on the last wick. Okay, so that would have been 161. We would have entered in here at 168. Okay, we could have DCA'd. So in other words, we could have had another potential long opportunity from about this range here where the previous wicks were as well at 165 to see if price did get back down there. However, as you can see here, it never did. It only bounced off this support line at 168 and a half, at 0.24, sorry. And essentially, look at that. That's a 5.5 ratio for you to take that trade on a 4-hour chart. So this is a support resistance trading tutorial using just really simple skills that I can use on several different time frames for all these different coins, guys. And this is just on one coin. Okay, that's one coin. There's thousands of tokens out there that you can actually do this. But ultimately, guys, where you want to be looking for is looking on the macro trend to make sure that you're trading either bullish or bearish depending on what's happening on price action here. So we're going up like this. Okay, so setting higher highs and higher lows, that essentially means that we are going up in a bull market. If we're setting lower highs and lower lows, that means that we're going down. So always zoom out first and then go into these short time frames and start to scalp some of these moves. I really hope you enjoyed this, guys. Please leave me any questions or hit me up on Twitter if you have any questions. More than happy to help you out. Cheers. So there you have it, guys. That's how I use TA to scalp trade. It works with Memecoins. It works with altcoins, as you've just seen here on MEXC. If you are looking to sign up for MEXC or Blowfin down below, they have a deposit bonus currently going on. And obviously you get some cheaper fees by signing up using the links in the description below. So check them out. I hope you found that really insightful. Please leave me any comments or feedback down below. I'm more than happy to help you out. As always, guys, take care and I'll see you again soon.